Hey guys, it's Eric with Low VA Rates, and today I'm hoping to debunk another myth or misunderstanding. I hear all the time that mortgage rates and the Federal Reserve's rate or the federal funds rate are the same thing. I might not hear it just like that, but essentially people call us up and they say, hey, I see the Fed just cut their rates a half point, so my interest rate should be a half point lower. That's not true. Okay, what is true is the Federal Reserve impacts mortgage rates and credit card rates and auto rates, but it's not the same. So let's talk about correlation. Are they correlated? Yes. The lower the Fed makes rates, the lower consumer rates are going to be. And here's kind of how it works. First of all, when you hear or see the Fed has cut interest rates, what the media is referring to is the federal funds rate. That's the rate that the Fed can go in and manipulate through interest rate cuts. They're lowering the federal funds rate. So how does that get passed down to the consumer? Well, the federal funds rate is the rate at which banks, so let's say Chase Bank and then Wells Fargo, it's the rate at which they can lend each other money back and forth. And banks are lending money all the time. The cheaper they lend each other money, the cheaper it is for them to operate and hence in return lend money out to you. Now, the Fed also has the ability, and they've done this recently in the last couple of years or so, to cut the discount rate, or maybe you've heard the discount window went lower. The discount rate is the rate at which the Federal Reserve lends money to the banks. Okay, so we call it like the discount window. Imagine you walk up to a window at like a drive-through and you give them some money and out comes your food. Well, when banks go to the discount window, they're borrowing money from the Fed, and it's super cheap right now for banks to borrow from the discount window. So as the federal funds rate comes down and as the discount rate comes down, obviously mortgage rates are impacted, but it's not a direct correlation. It's somewhat removed. Here's the good news. When you see the Fed cutting rates or you hear the Fed cutting rates, you got to pick up that phone and call Low VA Rates because our rates are extremely low right now. I don't know when you're going to be watching this video. Hopefully it's around for years, but in 2020 and mid-July of 2020, there are interest rates on 30-year fixeds below 2.5%. I try not to quote interest rates in this video for compliance reasons and also because rates are changing at all times, but there's never been a better time in history due to the coronavirus, unfortunately, due to the economic impact that it's had on the U.S. and the world. Interest rates are super low. The Fed has done their job. They may keep cutting rates even lower, which would maybe push them negative. So I don't even want to go down that rabbit hole with you guys. Hopefully you now understand much more clearly the federal funds rate or the discount rate, these rates the Fed has influence on, they do affect interest rates, but they are not the same thing. Thanks for watching. Hopefully we debunked that myth for you.